Welcome back. Let's talk to leading technician Zach Muir. Zach, Daily Mail weekend highlighting the hedge funds, the brains, shorting a whole array of UK stocks. Let's run through a quick five. Let's kick off Debenhams. According to this, shares short 12%.
Yes, I think this is probably the classic chart that you would expect to see in a very shorted stock. You had the gap down, which the gaps normally start such moves. So you had the gap down June last year, and really the shares were never able to fill that gap. So that's a pretty bad sign. Normally a gap will be filled, and then the downtrend will resume again. So down all the way, falling 50-day and 200-day moving averages. Here you'd be looking to sell strength towards the 50-day line at 45.
Understood. Let's move on to Marks and Spencer's, 11%.
Situation here, topped out, I suppose. Well, there is normally a gap. There's normally gaps around the place at the beginning of such moves. So let's say that one was June last year as well. Since then, we haven't really been able to recover. Just overlap the gap in May, I think, at the time of the update. But really, below the 200-day moving average, you'd be looking for a retest of last year's lows towards £2.50.
Understood. Mitie Group. And the number there, 10%.
Well, interesting that we had that massive gap to the downside last September. Gap up here, but obviously it looks like it's been a bull trap. Back below the 50-day average now at 266, and really while we hold below that, you'd be looking for the shares to head back towards the 200-day moving average. So just a bit of a, I suppose, stopping out the bears there early on that one.
Understood. Lancashire Holdings in the insurance sector, 9% shorts.
Again, well, I suppose this is one of those situations you probably wouldn't necessarily be expecting this to be a short. The only thing is we are near the highs, so you've got to, it's easy,
natural
stop loss above the highs. But golden cross there between the 50-day and 200-day moving averages last month. Literally, it depends on your faith in the hedge funds.
Understood. And let's wrap up with Pets at Home, 9% of the company being shorted.
Yeah, I think that's a more logical situation. As I said before, gaps to the downside normally start these situations. So, in fact, that picked the top very nicely in October. Fresh one just to get us fresh one through the 50-day moving average then in January. So this looks like a classic situation. The only thing here is probably just not to try and sell the stock too low. Wait for a rally maybe towards the 160, 170 area, the 170 area before going short again.
Zach Muir, thank you very much indeed.